What's up, guys, and welcome back to Rougefx. Today we are going over something rather new, something rather unique. Never before seen, never before heard. At least, I've searched and I've been trading within this industry for well over going on 5 years. And I've discovered a lot about these markets, and I'm here to share them with you, of course. If you haven't already, hit that like button, subscribe to the channel because we do aim to post consistently. Definitely ring that post notification bell. I do provide mentorship through my membership, as well as provide signal services, all within my Roguefx private trading community, or I should say our, right? Now, concerning the last video we recently dropped, essentially the Rogue Blueprint to Trading Success, it's important to realize that, of course, those 3 phases are very much important. The beginner phase, conscious introduction, advanced, imagination and anticipation, and masterclass, deep knowing and becoming. The beginner method, generally looking at the dot method and really kind of structuralizing our strategy within our minds. This is a bit more on the labor side because essentially you're going to be new to the information. Therefore, it's going to take a bit more time to really kind of digest the information very much properly. Advanced being simply emphasizing our range cycle, external range liquidity, internal range liquidity, and how that kind of really goes, right? It goes into a continuous cycle, as well as studying price action to the T, or to a very significant level, of course. Really understanding the concepts liquidity grab and mitigation sequences, realizing imbalance close price action, as well as price action inefficiencies, as well as rebalancing mechanisms, of course. Masterclass going over essentially providing you a deeper knowing or understanding of what you're essentially looking to realize within these markets, right? And what do I mean by that? It's essentially understanding your liquidity pools to the furthest extent, understanding that you're essentially looking for a weak high, a weak low, understanding that there is liquidity and or a protected low or high above or below that quote unquote liquidity, understanding that generally you're going to look to take a precise execution, of course based off of the market data being presented. At this point you will understand and really kind of comprehend liquidity pools and how you can very much measure them with your fib, really kind of retrace your discount as well as premium levels and find opportunity not only against our key levels, in whichever case a mitigation sequence, but maybe 3 to 4, maybe even 5 pips above or even below within our quote unquote discount or premium pricing. Essentially, just to not confuse anyone, understand that we have a premium price, a discount price. Understand that within a discount price, we very much have a premium price and a discount price, and then so on and therefore. This is actually bringing us up to date as far as this video. It is important to understand that opinions, they're not facts. And a lot of the times, facts aren't even facts. Just essentially viewpoints based off of your level of understanding. At least, in my opinion, of course. Today we will be going over something a bit different, if you will, right? We will be essentially going over a full trend and a half trend. And I'm going to get into what essentially these, I guess you could say, labels for these specific ranges are essentially insinuating, right? So for our full trend, price is essentially going to establish its protected high, weak low, retest or retrace for internal range liquidity, find support, or maybe even provide a T1 tier 1 trade opportunity, in order to, of course, continue towards the lows. It is important to understand within a full trend, price is essentially using our protected high and weak low as our overall range. We can very much take our fib, very much retrace, as well as maybe even find a point of interest within, redefine, very much stretch and understand that price is simply performing a liquidity grab to continue towards the lows, from, of course, the result of internal range liquidity being taken out, as well as our point of interest being liquidated or essentially reacted from. Whether price uses the 50 for a retracement, a little bit under for a consequent encouragement, or maybe even retraces maybe even 95% of our overall range, understand that as long as this protected high is validated, in a sense taking out or breaking structure of a major low or structural low, as well as our weak low being validated, essentially breaking structure towards the opposite direction, targeting very much internal range liquidity to external range liquidity. Now, in most cases, you'll be finding yourself taking this trade off of any kind of point of interest, maybe a rejection block, maybe a significant order block, whether that is, of course, a rebalancing mechanism or an imbalanced close price action. Understand that everything is simply dependent upon the market structure being presented at the time. This is going to establish our full range. And of course, it's important to understand that we very much have vice versa. Whether we very much retrace 95%, 50%, or provide a consequent encouragement, it is important to understand that really the most important thing is to understand how valid your range is, understand or locate internal range liquidity, as well as a POI that very much provides a significant amount of volume to very much, in this case, mitigate. Now, when we talk about half trends, and again, we are talking about a significant range that's being established within price, many times price is going to establish a weak high, a weak low, run that weak low. It is very much understood that this high is acting as a weak high simply because it didn't break towards a major structural high. Therefore, it's simple liquidity. With liquidity very much being ran, as well as our POI essentially being reacted from, price can very much continue towards the lows, essentially setting up countless opportunities for liquidity grabs on the way down towards where? Internal range liquidity. It's important to understand that we can very much measure our fib using the weak low and weak high. Guys, very much don't get confused. Essentially, there's probably going to be a protected high towards the left. Don't make it too complicated. We have essentially our liquidity pool being marked up, as well as our Fibonacci to essentially measure or retrace, measure our retracement and very much understand the plethora of liquidity grabs that very much take place on its way down. This is understanding that price is essentially many times going to establish a weak high, protected low. This protected low will very much be used as, in this case, it was very much used as an imbalance break and retest, essentially to fill, carry price towards the highs, in whichever case providing a liquidity grab to continue in a reversal, right? So essentially targeting our, yes, I did very much say this was a protected low. However, it's important to understand that mitigation sequences are very much the highest form of liquidity. If we are redefined, it's understandable to assume this slanted low would act as our form of liquidity, essentially helping us continue price toward overall lows, right? Essentially, that's going to be what it's going to look like. I can very much show you the long perspective as well. It's important to really understand, of course, that trend lines do play a significant role within this strategy, as well as, it's just important to pay attention to the higher lows that are very much being established. Whether it hits the trend line or not, market structure very much is the thing. Now, I understand that this may be a bit confusing, a bit like, how is this going to improve my trading? I wouldn't worry too much. Just give it a second. We will very much get into some chart work very much here soon. But before we very much get into it, if you haven't already, hit that like button and subscribe to the channel. I do appreciate every one of you for tuning in. I do appreciate every one of you for hitting just about any one of my videos because I am just grateful, guys. I just want to let y'all know I'm grateful for everyone who does tune in, everyone who does essentially take this information into consideration, especially those who are very much, determined, those who are very much understanding of the opportunity being presented to them every time I upload. If you're one of those people, I very much commend you. I can't wait to very much meet you, right? What do I mean by that? I mean, guys, if you want or if you feel the need to, I do encourage you to take me on as a mentor. I provide maybe 3 to 4 team calls a week. I provide signals. I provide a plethora of trading content setups, very much alike. All that I ask is your trust. All that I ask is your faith in my wisdom, right? Not necessarily mine. If I'm being realistic, God's wisdom. But I mean, then again, regardless, I am very much grateful to have every single one of you here. Without further ado, let's get started. What's up, guys? And we're back. So essentially, we are here on GBP/JPY. Let's see if I can just get this centered. Okay. So we very much have an example of our beginners phase. So we have our in whichever case, weak high, protected low. We have our point of interest as well as internal range liquidity. We were able to execute our order, essentially acting as a mitigation sequence of an unmitigated wick to continue towards the highs. Concerning our second trade opportunity, we very much have an unmitigated bullish rejection block being essentially mitigated, right? We can very much use our fib to essentially find a significant retracement, in whichever case we have a plethora very much breeding a liquidity grab, essentially understanding that, well, liquidity grabs come from a mitigation sequence, which should give you the utmost confidence when, of course, taking your trade, as well as respecting your stop loss. Concerning our third trade, we very much have a opportunity for a weak high and weak low. This weak high and weak low can be very much used as a liquidity pool, as well as retrace with our fib, where we have countless opportunities for a liquidity grab, mitigation, as well as a few other significant liquidity grabs, as well as our late entry mitigation. It is important to also understand that, of course, the market is fractal. What do I mean by that? Well, essentially, you can find opportunity within opportunity within opportunity, and so on and therefore. I very much do not want to confuse you guys, so I'm going to keep it just brief and help you guys really just understand what I just did. We very much have a liquidity pool, point of interest, right? Within that liquidity pool, we have areas of different levels of volume. So depending on where price is, it is important to understand that price is essentially going to reach for liquidity, or in whichever case, an inducement to liquidate, or essentially provide that liquidity grab and continue towards the highs. This is a special, like when you get to this phase in your trading journey, this is when you start to become a very talented and special individual. You start to understand the utmost opportunity and really, in whichever case, the fallacy of, the term missing out, right? Or fear of missing out, in whichever case, right? There is no fear simply because you'll have ample opportunity. Just that simple, of course. Now, as far as a half and a full trend, it is important to understand that, if I'm being honest, this is literally everywhere. This is, man, at this point, I don't even want to call it a mastery. It's more so you got it to a significant level. Now, go be free. Like I don't. I'm really trying to like put it together, really kind of understand what this actually means. Because of course, I really just, I mean, I'm not gonna say I made it up, but yeah, I just came up across a, if I'm being honest, like a series of losses, maybe like 2 or 3 in a row from GJ and GU, which I mean, it's weird because I mean I started the week off on both of those pairs pretty good. Like I mean, as far as this week, I can post this literally in like 2 months, and we can just be on a whole different, you know. So just understand this week that I'm actually making this call or this video in whichever course. Apologies in whichever case. My friends, it's important to understand that this is understanding your ranges to the fullest extent. And what do I mean by that? Well, as we kind of already went over a full trend and a half trend in the beginning of this video, which you can very much just rewind to, it's understanding the difference, pretty much like night and day, heads or tails, and the differences are essentially uncanny. Like it's essentially black and white, right? It takes essentially the gray area out, so you can very much have that space for clarity, right? A lot of what comes with trading is, I mean, very much ambiguity, which in whichever case, I mean, that's it, right? That's how you get better. You get better by losing. You get better by taking the L and going over your steps, going over your psychology, going over your system, and really kind of tweaking it as your journey continues to go by. That's trading, guys. Those who are afraid of losses, those who are afraid of missing out, those who live in fear in general, in whichever case lack mindset, guys, this is trading. And if you're not doing this and you're just really doing anything besides, you know, studying, you're not, no, I don't know. Without further ado, let's very much get started. When we are looking for half trends and full trends, again, the differences are like night and day. And when you understand this, you'll understand why it is such a powerful tool. If I'm really just thinking, like just understanding at this point. And again, before I get into this, and I know I'm stalling, guys, just give it a second. Understand that I literally just came up with this maybe like a day. We'll broaden that perspective out. Maybe like this week, like today's Saturday. This week was the result of this particular strategy actually coming into existence. So I'm just letting you know, like you need to lose in order to improve. That's literally the gist of my essentially my point, right? So, what is a half trend going to look like? It's going to look like a weak low protected high. You're going to draw your liquidity pool. Apologies. Now, with this understanding, it's important to understand that within this liquidity pool is ample opportunities to buy or sell, of course. Um, a lot of people, they don't like to buy within the liquidity pool simply because they don't understand where they are within their liquidity pool, right? So essentially they'll take a buy right here and end up being wrong, and of course that's their stop loss, and they're confused on why. Essentially you traded a full trend instead of a half trend. That's the only difference. Now, as far as a half trend, it is important to understand that with every reach towards the high, or in whichever case internal range liquidity, it's just simply a liquidity grab. Fairly simple. Now I know what you're saying, Jody. Well, how do you understand that? How do you know that? I only see maybe like one liquidity grab. Well, it's in whichever case you need to pay more attention to price action, right? So we very much, yes, we have a liquidity grab, a reach for maybe an equal high, an opportunity for an optimal trade entry. However, if we were to use our Fibonacci to retrace our overall half range, we get one liquidity grab, two liquidity grab, three liquidity grab, and then we get an opportunity for a mitigation. A lot of people like to call this an imbalanced close price action. However, as long as your rejection block is residing on top of a key level, we're going to call that, or that's going to act as a mitigation sequence, essentially allowing price to what? Liquidate it. Mitigation sequences very much breed liquidity grabs. Liquidity grabs magnetize towards where? Mitigation sequences. Fairly simple, right? Now, of course, it is very much, you know, I understand it's literally just one pair, one trade, however the case may be. However, when you use your imagination, life trading in general becomes a bit more simplistic, right? At this point, we have one trade opportunity, two, three, four. Now, just to essentially show you just how prominent or um, resilient this, we'll call it a, essentially it's a theory, but we'll essentially label it as a concept for now. Going around this, essentially this chart looking for what? Half ranges. We should be able to find at least three or four, right? So we have one right here. We have one right here. We have as well as one right here. As well as one right here. Weak high, protected low, shift, retest, continue. In whichever case, you would have this direct entry as well as this confirmation entry. And if you're really good, you'll have this late entry. This is 1, 2, 3, 4, 5. 5 different half trends that all have an ability to be measured, an ability to very much be measured, an ability to very much be measured and measured for simple retracements. Now, my friends, as far as a full trend, this is what that's going to look like, right? Essentially, we have a protected high, we have a weak low. Moving into the higher or finer details within price action, we have, again, our protected high, weak low. What makes this high protected? Essentially, we have a shift in momentum, resulting in a major break of structure of a, we'll call it a structural low at this point. We are on the 15-minute time frame. What makes this weak low valid? Well, simply we didn't take out a major low. This is labeled as a weak low. Price shifts, retests, internal range liquidity, point of interest, mitigation sequences breed liquidity grabs, reaches for internal range liquidity, which happens to be what? An inducement. Now, I know what you're saying. Well, this is essentially just the dot method. No, this is helping you understand what you are actually looking to essentially comprehend as you are looking for these specific, or I should say these specifics within a full trend, right? So we have our protected high, weak low, inducement, liquidity, retracement, continue towards the highs, internal range liquidity. It's important to understand that we very much have a premium and discounted area within our range. Understanding that, we can take our premium and very much measure it, understanding that we are very much presented with a liquidity grab, a liquidity grab, as well as a continuation towards the lows and or external range liquidity. Now, do you think you could locate a full or half trend, essentially range A or range B, or whichever side of a coin you decide that is best for you in, of course, at your trading window, of course, right? Whether you are right here and you're dealing with a half trend, or maybe you are somewhere up here and you're dealing with a full trend in order to continue towards the lows. One thing I very much do want you guys to keep in mind as far as dealing with half trends is essentially a lot of the times it's going to start with an accumulation. A lot of the times we like to call this AMD pattern, which is, I mean, that's fine. It works. You know, it's a thing, but it's a bit vague and to an extent can be a bit ambiguous at times. Price establishes a liquidity pool and or consolidation. How do we know that this is a significant liquidity pool? We have a weak high and a weak low. And of course, liquidity grabs can very much take place above and below, as well as far as taking out buys and sell stops. Now, many a times, price will essentially, I mean, in this case, price provided a mitigation, which bred up for a liquidity grab. Price used this weak high as an opportunity to, again, provide a liquidity grab. In whichever case, on the lower time frame. This should, in whichever case, I mean, granted, if you get a significant reaction as we did, give you that much more confidence, because as that point, that is your first of many liquidity gaps you will be looking for. In whichever case, with this being a half trend, notice how it didn't all, just, it is very much important to understand that, price didn't continue all the way down to the lowest lows. Instead, it essentially reacted toward maybe a fair value 50 equilibrium and continued for the high. It's just structure based. It's nothing that's essentially keeping you from profitability, simply because what very much can take place again on the 15-minute can take place on the hour, the 4 hour. Understanding that is understanding that every time you are reaching toward internal range liquidity within a liquidity grab scenario, or in whichever case, a half trend scenario, again, you're reaching for internal range liquidity. Internal range liquidity. And more so, I mean, in this case, price, performed the break and retest to really operate off of this rebalancing mechanism. However, the opportunity for a scale in is still there. Where do we target it for internal range liquidity? Where do we target for external range liquidity? Essentially, we can very much just mark our liquidity pool with our retracement Fibonacci level. Price simply reacts toward a fair value equilibrium and continues towards the highs. Now, this doesn't mean that price couldn't just continue towards the lows. It's just on this specific scenario, price didn't. I didn't show you one that price did simply because, I don't want you to believe that price will always do that. Simply because everything is, every trade is unique within itself and nothing is essentially coincidental. An example of a half trend that actually, follows through towards external range liquidity would end up being this, right? So we have a weak high, we have a weak low. We can very much measure this with a pretty significant Fibonacci, as well as very much understand that, well, price is essentially providing us with a plethora of opportunities for a significant liquidity grab. Don't mind this Fibonacci retracement. It is simply just a redefined version of our weak high and weak low. It's just that simple. Do not get confused. Very much helping us understand the plethora of liquidity grabs that price essentially has available for us, right? This makes it that much more apparent. And again, simply because we understood that we are going through a consolidation, price manipulated towards the highs, we got our protected high confirmation. We've been had our weak low confirmation. In whichever case, all we need to do is build up the confidence, experience, as well as skill, develop the skill set, develop your craft over time, of course, at your own pace, right? So in whichever case, many of times, a lot of traders, new traders, wouldn't be comfortable holding to this structural low or 3 candle formation. Instead, they'll probably take it at this maybe mitigation sequence or imbalance, or maybe an emergency exit, so a weak low, equal lows essentially. Everything is situation based. Everything is based off of structure and price action, my friends. I do appreciate every one of you guys for tuning in. That is very much all the time I do have left. That is very much all the time I do have left for you guys. I do appreciate every one of you for tuning in. I do appreciate the love, the support, the likes. Those who very much participate in the comment section below. Those who very much do participate within the comment section below. It is very much appreciated. I am grateful to God to be able to live out my dream, to be able to continuously make an impact and leave an impact on a struggling industry, a very much struggling industry that's very much on the come up. I have no doubt in my mind that trading in general, especially when it comes to this community, is very much on the come up. It's gonna take time. It's gonna take time, my friends. However, your patience is very much appreciated. Until next time on Jody FX.